Hey everyone, welcome back for another deep dive. We're really excited about this one because we're going to unpack the best ways to invest in gold and silver.
Yeah, gold and silver, always a hot topic.
It really is, especially right now.
Exactly, and I think for good reason. I mean, people have been drawn to these precious metals for, well, forever, right?
It seems like it, for sure.
So, are you ready to dive into some of the articles, guides, and expert opinions we've gathered?
Absolutely. Let's get into it. I know a lot of our listeners are really looking for clear and simple ways to understand how to approach this, so let's try to break it down for them, without getting too lost in the weeds.
Sounds good. When you look at gold and silver, they really do stand out. They've got this long history of being dependable assets. They're like a safe haven.
Yeah, that's the term you always hear, right? Safe haven asset.
Right. A store of value. They're not as susceptible to the whims of the market as some other things might be. And that's especially important when things get a little shaky in the economy. Our sources really emphasize how they tend to hold their value when other investments might be taking a dip.
It's true. They have a track record of sort of weathering the storm.
Okay, so let's talk specifics. How can someone actually own gold and silver? What are the options?
Well, I think the most straightforward way is through physical bullion, actually holding the metal.
So like actual gold coins and bars.
Exactly, like you see in the movies.
So let's start with coins. What are the advantages there?
Well, the sources we have point to coins being popular with smaller investors. And it makes sense. You can buy what you can afford, and if you need to, you can sell off a portion of it.
You mean they're divisible?
Right. And they're pretty easy to trade, so you're not stuck if you need to liquidate. The American Gold Eagle and the Canadian Maple Leaf are popular choices for gold.
And for silver, what coins come up often?
The American Silver Eagle and the Austrian Silver Philharmonic. Those seem to be the most highly regarded.
One thing that really struck me is how much people value that tangible aspect of owning physical gold.
Oh, absolutely. It's almost primal, isn't it? I mean, throughout history, when financial systems have crumbled, gold has always been there, like a constant. You can hold it in your hand.
It's a real tangible thing.
It's not just numbers on a screen.
But what about bars? I assume those are for the big players.
Well, bars are generally for larger investments. They come in various sizes, but what's really attractive is that they often have lower premiums compared to coins.
Okay, so remind me, what exactly is a premium?
The premium is the amount you pay over the spot price. The spot price is like the market price for immediate delivery. It covers the cost of, making the bar and getting it to you. But because you're buying a larger quantity, the premium per ounce is lower.
So if you're looking to maximize the amount of gold or silver you get for your money, bars are a good way to go. But the downside is you need to have a chunk of change to invest.
Right. But physical bullion isn't the only option. I mean, some people prefer not to deal with storing and insuring physical gold. They find it a hassle.
So what do?
They look at gold and silver ETFs.
ETFs.
Right, exchange-traded funds. These are funds that track the price of gold or silver. You can buy and sell them just like you would stocks.
Oh, interesting. So you're not actually owning the physical metal, but your investment is tied to its performance.
That's right. And one of the big benefits is the liquidity and ease of trading. You can get in and out of positions quickly, which can be really advantageous.
And I imagine there's no need to worry about storing a bunch of gold bars in your basement.
Exactly. No vaults needed.
But of course, nothing's perfect. Are there downsides to ETFs?
There are some things to consider. Like any fund, ETFs have management fees, which can eat into your returns over time.
So always read the fine print, right?
Absolutely. And also be mindful of counterparty risk. Basically, it means that if the institution holding the gold or silver for the ETF runs into trouble, there's a small chance it could affect your investment.
Okay, so that's something to keep in mind. Now, what about investing in mining stocks? That seems like it could be a bit riskier.
Mining stocks can be exciting. You're essentially betting on the companies that explore for, develop, and produce gold and silver. If they strike it big, you can see some significant returns.
But what makes it riskier than, say, owning physical gold?
Well, mining is a complex business. There are a lot of things that can go wrong. Geological issues, equipment failures, labor strikes, political instability in the regions where they operate, plus the price of gold and silver, which can fluctuate significantly, directly impacts their profitability.
So a lot of factors outside of your control.
Exactly. Now, one of the articles did point out some ways to potentially mitigate risk.
Oh, yeah. Like what?
Well, for example, thoroughly vetting the mining companies before investing, looking at their management team, their financial health, the specific mining projects they're involved in.
So really doing your homework.
Right. And diversifying your investments within the mining sector is key. Don't put all your eggs in one basket.
Okay, solid advice. Now let's move on to something that sounds a bit more specialized. A precious metals IRA. What exactly is that?
A precious metals IRA is a self-directed IRA where you can hold physical gold and silver as part of your retirement savings. It offers similar tax advantages as a traditional IRA, like tax-deferred growth.
So you're basically holding physical gold in your retirement account. That's cool.
Exactly. It could be a really great way to diversify your retirement portfolio beyond stocks and bonds. And the fact that gold and silver often don't move in the same direction as the stock market makes them a good hedge against broader economic downturns.
So it could potentially help protect your retirement savings if things get rough.
Right, and it's good to know that you can often transfer or roll over funds from existing retirement accounts into a precious metals IRA without triggering immediate tax consequences.
But there are rules, right?
Yes, of course, you have to follow IRS regulations.
But overall, it sounds like a pretty interesting option for people looking for a different way to diversify their retirement savings. Now, the sources all seem to agree that precious metals IRAs are best for the long haul. Why is that?
Well, there are fees involved in setting up and maintaining a precious metals IRA, so it's not really suitable for short-term trading. You want to give your investment time to grow within that tax-advantaged structure.
So play the long game.
Exactly. Okay, now that we've covered the various ways you can own gold and silver, let's move on to specific strategies, starting with gold. The one that comes up again and again is long-term holding.
Buy and hold, right?
Exactly. Historically, gold has held its value incredibly well over extended periods, and in times of economic turmoil, it tends to appreciate. So, for many, gold is a way to preserve wealth over the long term.
A sort of safety net. Now, what about gold futures? I've heard that can be a bit of a roller coaster.
Gold futures are contracts that obligate you to buy or sell gold at a specific price on a specific date in the future. They can be very profitable, but they're also very risky, especially for novice investors. They involve leverage, meaning you can control a large amount of gold with a relatively small amount of capital.
So the potential for both gains and losses is magnified.
Exactly. You can make a lot of money quickly, but you can also lose a lot of money quickly. Our sources were pretty clear about this one. New investors should tread carefully and consider getting professional advice before diving into futures trading.
It's not for the faint of heart. Speaking of economic turmoil, a lot of people see gold as a hedge against inflation. How does that work?
Well, inflation erodes the purchasing power of money, right? But gold, historically, has held its value much better than fiat currencies during inflationary periods. The amount of gold in the world is relatively limited, and unlike paper money, it can't just be printed at will.
It's a finite resource.
Exactly. And one article gave a great example from the 1970s in the US when inflation was really high. Gold prices surged as people looked for a safe place to park their money.
It's fascinating how history seems to repeat itself in the financial world. Okay, let's move on to silver strategies. One thing that stood out to me is that timing the market seems to be more important with silver than with gold. Why is that?
It all comes down to volatility. Silver prices tend to be much more volatile than gold prices. That's partly because silver is both an investment asset and an industrial metal.
Meaning it's used in a lot of products.
Right. Electronics, solar panels, medical devices. The demand from these industries can really impact silver's price. So understanding economic indicators and industrial trends can give you a sense of when might be a good time to buy or sell.
So it's about riding the waves, so to speak.
Some people try to do that, but it's not without its risks. A more conservative approach is to consider silver as part of a diversified portfolio and hold it for the long term, betting on the continued growth of these industries.
A long-term bet on technology.
Right. And, the growth of renewable energy, especially solar, is specifically mentioned as a potential driver for silver demand in the future.
So silver could be a play in the green technology space.
Exactly. And, of course, just like gold, there are silver futures contracts, too. But again, they're speculative and risky.
High reward, high risk.
That's a good way to put it. Okay, so now that we have a good understanding of the different ways to invest in gold and silver, let's wrap up with some practical tips for making smart decisions. The sources consistently emphasize the importance of conducting thorough market research before you invest. This can't be overstated. Take the time to understand what drives gold and silver prices. Keep up with economic news, geopolitical events, and for silver, stay informed about trends in industrial demand. The more you know, the better equipped you'll be to make sound judgments.
Knowledge is power. And that brings us to another golden rule of investing. Diversify, diversify, diversify.
One of the articles actually said, and I quote, "Diversification is a key principle of successful investing."
Couldn't agree more. So in this context, what does diversification look like?
It means spreading your investments across different asset classes. Don't put all your money into gold and silver. Consider stocks, bonds, real estates. A balanced portfolio is generally a safer portfolio.
Don't put all your eggs in one basket. Okay, next tip. Understand the risks associated with each type of investment and manage them accordingly. What are some examples of that?
Well, if you're holding physical bullion, think about how you're going to store it securely. If you're investing in ETFs, make sure you understand the fee structure and any counterparty risk. If you're buying mining stocks, be aware of the operational and geopolitical risks we discussed earlier. And if you're dabbling in futures, know what you're getting into with leverage.
So it's all about being informed and having a plan. Now let's talk about some common mistakes to avoid. What are some of the pitfalls that investors fall into?
Well, the first one is pretty obvious, but it's worth repeating. Don't invest without doing your research.
Impulse buying is rarely a good idea.
Exactly. And another mistake is neglecting to diversify. We've already talked about that, but it's important enough to mention again. Don't put all your money in one place.
Spread the risk.
Right. And don't forget about the costs associated with physical bullion. Premiums, shipping, storage, they can add up and impact your overall returns.
The hidden costs.
Exactly. And finally, be very cautious about engaging in speculative trading, like futures contracts, without fully understanding the risks.
Don't gamble with your money.
Right. If it sounds too good to be true, it probably is. Now, with all that in mind, are there resources that can help investors make better decisions?
The sources talk about the importance of leveraging professional expertise. What does that look like in practice?
Well, there are financial advisors who can help you develop a personalized investment strategy based on your financial goals and your risk tolerance. There are reputable precious metal dealers and brokers who can offer insights and facilitate transactions. Attending seminars and workshops can be a great way to stay updated on the latest trends and hear from the experts.
So lots of avenues to explore.
And don't forget about the power of community. Joining investment forums and online groups can connect you with other investors who can share their experiences and insights.
It's always good to learn from others. Okay, let's do a quick rundown of some of the key questions that often come up. The big one is, why should someone invest in gold and silver in the first place?
The sources highlight three main reasons. They're considered safe haven assets, they can potentially hedge against inflation, and they can diversify an investment portfolio.
Okay, so what's the main difference between investing in gold versus silver?
Gold is generally seen as a more stable, long-term investment. It's a store of value, and its price tends to be less volatile. Silver is a bit more dynamic. It's also an investment, but its industrial uses make its price more sensitive to economic and technological developments.
So silver is a bit more of a wild card. What about storage? What are some safe ways to store physical gold and silver?
A few options are mentioned. A home safe that's properly anchored, a safe deposit box at a bank, or using a professional storage facility that specializes in precious metals.
Okay, and lastly, can you invest in physical gold and silver through a retirement account?
Yes, you can. It's done through a Precious Metals IRA, often called a gold IRA. The author even recommends checking out their article titled, "What is a Gold IRA and How Does It Work?" for more details.
So there you have it. Investing in gold and silver offers a variety of options, each with its own set of characteristics, risks, and rewards.
It really comes down to understanding those differences and making choices that align with your individual financial goals and risk tolerance.
Absolutely. And as we wrap up, here's a final thought for you to consider. Given the long history of gold and silver and their growing role in technology, how do you think future economic shifts and technological innovations might impact their value?
And how will that impact your investment strategy?
It's definitely something to ponder. This deep dive has been based on the insights of Doug Young, who has over 20 years' experience in financial investing, commodity trading, and precious metals.
He's a real authority in the field, particularly when it comes to gold IRAs and retirement planning. You can find more of his work and insights on various social media platforms and through his RSS feed, usually linked on his website. Just search for Doug Young.
And that brings us to the end of another deep dive. We hope you found this exploration informative and helpful. We'll see you next time.
Until then, happy investing.